Yeah.
And we are recording. Wow, this is super exciting again. Once again, Terry, I think this is like number 25, Terry. We keep going all over the country. And you'll notice, Terry, that I have a nice new background. We're getting dumped on. There's what is that called? A California river or a stream coming in through the Pacific. So California is going to be gone anyway. So people need to start leaving California. But we're getting 1 to 2 feet of snow in the mountains. It's raining, but not like in LA and San Diego. Have you heard about the weather? How's the weather there in Florida, Terry?
Oh my gosh, it is beautiful today. It is about 70 degrees. We're expecting a little bit of rain. We had a major thunderstorm that lasted all of 15 minutes last night, but
Yes.
I'm telling you, there was lightning galore. It was awesome. And when you don't have to turn your sprinklers on here, that's a good thing. We'll take all the rain we can get. So it's a beautiful day here.
That's
Well,
awesome.
today, Terry, we have a couple of special guests from the central Indiana area, and they have a special program that they're going to share. And to all of our members out there, we want you to realize that we're not just talking about new cities. We're not just talking about leaving California, but we want to bring you more value. We want to bring you special guests that can actually help you and help your financial freedom, help your future, help you if you're buying a home, help you do a lot of things. So today, I'm excited to have Melinda Chapman and Brian Nates. So, Melinda, how are you?
Hey, I'm doing well. Thank you so much, David, for having us. I can't
Well,
say our weather's that great, but we've got some sunshine, so it's not kind of dreary. The sun's shining a little bit, and it is warmer. So I haven't even checked, but what, 40s, Brian, maybe? Are we in the 40s?
Yeah, we're in the high 40s, but the sun is out, which is awesome because we're known as the Gray Dome here, which it's not great today. So that's cool.
That's great.
well, it's so nice to have, and you know, we'll be transparent. Melinda is a licensed realtor. She's a really good real estate agent. But not only is she bringing information about Central Indiana, she also has another concept that she thought would be really good for our Leaving California members to share. And Melinda, I guess, what do you think, Terry? Should we start with real estate or should we start? What do you think, Terry?
Well, let's start with the United Financial Freedom. That's why Brian has joined us also. And let me just also preface this. Melinda was great about uh, staying after me to look at this program. And in the early days of the group, it was 7 days a week trying to monitor this group and admin it and everything else. And she stayed after me, and I'm very thankful for that, because when I sat still and I looked at this, I said, this is revolutionary. This isn't evolutionary. This is revolutionary in the finance world. And I would strongly recommend that if people have not seen this program, which most people haven't, that they take a look at it, because this can really save you a ton of money and help you become financially free so that you can do things like retire early, travel more, things like that. And on the surface, it sounds too good to be true, but once Melinda and Brian showed this to me, I became a big believer. So with that, I'd like to start with that, David.
Melinda, why don't you go ahead and introduce your guest and tell us exactly about all this exciting information you're going to be sharing with our members.
Yeah, so like they said, I'm Melinda Chapman, and I'm a realtor here in Central Indiana, and we'll talk about why you should move to the great Hoosier state here in a little bit. But for now, let's talk about this amazing online financial GPS that we can offer clients, or frankly anyone. You don't have to be my client to take advantage of this. Anyone that has any kind of debt, honestly, like David said and Terry said, you absolutely need to take a look at it. We literally help people pay off their mortgage and any other debt in as little as 5 to 7 years. We save them as much as 75% of the interest they otherwise would have given to their lenders. And we do it in a way that you don't feel it. It doesn't change. It doesn't require a change to your lifestyle or budget. So I'm honored to have my business partner, Brian Nates, who's been with the company almost as long as it's been around. We're almost a 19-year-old company. And Brian has been with the company for a long time. He's one of our top producers, one of our top executives in the company, and I'm fortunate to work directly with him. So everyone, Brian Nates from Zionsville, Indiana.
Good old Zionsville, Indiana. Thanks, Melinda. And thanks, guys, for allowing me to be here. It's such a privilege. And just want to, the Money Max account is a great solution. It is a way, my background is in financial services, so I focus a lot with clients on helping them eliminate their debt and plan for their future, their retirement, etc. And a big part of it is their cash flow. Even investors, right? Cash flow is so important. And with the Money Max account, it's a phenomenal tool. Yes, it's been around a long time now. We've built a lot of great strategies inside of it that allow clients to eliminate most of the interest out of their life, pay off their debts, even a mortgage if they wanted to. And I say if they wanted to, because some people don't necessarily want to pay off their mortgage, but they can certainly build equity quicker and use that equity to buy more properties and to build more wealth and to get more cash flow. So what our system does for clients is use very strategic banking principles and strategies that again allows them to eliminate the debt, pay it off in a fraction of the time. It's been working such an amazing thing. Even myself personally, I paid off multiple properties with it. The house that I bought here in Zionsville, Indiana, my backyard is a cornfield, and I think I saw Kevin Costner on it the other day. It was pretty cool. But I love it. I love where I live. But even more than that, the amount of interest that I've saved because of this very program has revolutionized my family. I'm going to be paying this property off that I bought in January of 2020. In April of 2025, it is free and clear. And I signed up for a 30-year mortgage, yet I'm going to have it paid off in 5. And I've done that multiple times. We have helped over 85,000 clients now pay off about $2.5 billion in debt in record time. And again, some of us don't want to be completely debt free, and I get that because we think mortgages is okay. It's what's called good debt. But if you could fast forward and eliminate most of the interest and build equity quicker, oh my goodness, there's so much more stuff you can do for getting more cash flow, for buying that dream home you've always wanted. If you can increase your equity faster, there's just a lot more freedom. I don't know if that makes any sense.
You know, Brian, it's funny. I actually wrote a book, and I actually wrote 2 books. I'm working on my second book, which Terry and I are working on together, and that's the handbook for the Guide to Leave California. But my other book is called Freedom from Rent. And one of the things that I've just really focused on and that I'm really good at is I try to take my clients from being a renter into being a homeowner. Now, I don't know if you know this or not, Brian, but about half of the homes, when you're in Las Vegas, we have 2.5 million people here. Half of the people that are in these homes are renting. So I think that the first step is let's figure out how to get them to have some wealth and equity for themselves and their future and their family. And then your concept of having a way to pay down the debt and to not have to pay that interest rates. That's wonderful. So I'm Freedom from Rent. And then you guys are financial. What's your company again?
United Financial Freedom.
Got it.
Yes, we work with a lot. Imagine, like, I'm sure there's realtors that are listening and watching right now, right? And so imagine if you were a realtor, just like Melinda, that's what she saw in this. You could take a lot of people that are renting, and a lot of the reasons they're not able to buy yet or purchase a home yet, a lot of times it's their debt, right? It's crushing them, and their debt to income's not right, and their cash flow's not right. And if you could eliminate a lot of the debt for them quickly, well, now you just created a referral machine. I'm talking as a realtor for a minute, right? Because we partner with a lot of realtors. We have an affiliate program that's phenomenal, and we can work with you and your clients. It's just such a blessing to help clients that want to be homeowners, and they're just not there yet. But we take them through the Money Max account and eliminate a lot of that debt in a really quick time. A lot of times our credit scores are shooting through the roof after they become clients, because here's what the Money Max account really is. It is the most efficient system I have ever seen. And I've looked at everything, okay? I love how the system, you know how like we all live in different areas. So if I wanted to drive from Indiana to Las Vegas or Indiana to Florida, I could do it the old-fashioned way, which is I'll buy a map at 7-Eleven. If they even have a map anymore, I don't know, right?
Mhm.
And eventually, I could figure out how to get to Terry's house in Florida, right? Like I'll eventually figure it out. Gosh, the problem with that is, well, there's a bridge out, or there's a road closed, or there's a horrible accident, or there's that police officer that's just waiting to catch me speeding, right?
Yeah.
In 2024, technology is here. So what we created, the United Financial Freedom founders, John and Skylar, spent about $20 million, and they went to work, and they spent a system that looks at every single debt you have, then looks at your income and your expenses, just like the Waze app, if you guys know what I mean by that, or your GPS on your Google phone or whatever that may be, and
Right.
how it's constantly giving you a step by step by step pathway on your journey. And what happens when you make a wrong turn? It just recalculates, right? And then if you make another wrong turn, it recalculates again. All we created was a system that is mathematically perfect, but it's not a static Excel spreadsheet. It's not a debt snowball or debt avalanche type program. Or some people on this call have learned about the HELOC method, which is like velocity banking, right? I'm in financial services, so I even do things for like called infinite banking, okay? But the reality is the tool of the Money Max account is literally figuring out the fastest step by step by step path to keep the client on track, hitting their goals, eliminating interest, but all in real time. And that's why I say it's like the Waze app for your cash flow and your finances, because the Waze app constantly recalculating your steps and letting you know police officer.
Well, so Brian, let me this is really exciting, by the way. I'm super excited. And for those of you guys listening from the Leaving California world, this is the first time that Brian and I have met, and I look forward to working with Brian, and we're going to talk more about this. Brian, the thing that gets me is that I believe that 2024 is the year of change. Hopefully, and we don't get too far into politicals, although on the show we will talk a little bit of politics. I just strongly believe that we got to get the guy that's in there out, and we need change. So hopefully 2024 is change. The thing that is driving me crazy is that I think that in our society, people are starting to believe that they have to rent. And their dream was always owning a home. So they believe that they have to rent. And then the one thing I want you to share a little bit more of is a lot of our buyers for me and Melinda would be, well, we want to wait till the interest rates come down. We can't really buy. We're going to wait. And I have this perfect analogy of if the interest rates come down, the house prices go up.
Absolutely.
If the house prices come down, then the interest rates go up. So right now, it's not a better time to buy. But so can you touch a little bit about the interest rate situation and what you say to your clients about, well, we're going to wait. We don't want to start building equity right now because we have to wait for interest rates to come down.
Yeah. We are conditioned. And you hit it on the head when you said that we're change, right? People, we need to understand that we are, as a society, conditioned. And we are conditioned by the very banking system, and I'll say Wall Street, to think a certain way. Okay. And that is mainly focus on rate and payment, rate and payment, rate and payment. If the rate was irrelevant, would you want to get the home of your dreams? If the rate was irrelevant, would you want to be able to become a homeowner? Right. And the answer is, well, yeah, of course, Brian, but the rate's not irrelevant. But what if we could make it irrelevant? And what I mean by that is no matter what the interest rate is, what's really hurting people, whether it's mortgages, credit cards, student loans, car loans, whatever that is, it's the interest volume that is crushing people, right? When you're paying a $2,000 mortgage and $1,400 of its interest, you tell me how that's 2% or 3% or 5%. Okay. Here's the truth. All the actuarial data shows that no matter what interest rate you have, you're probably going to only stay in that very loan 5, 6, 7 years anyway, because you're going to either move or you're going to refinance to get that beautiful rate and payment. And the banks said, thank you for doing that, because now we started that cycle of what I call death. Amortization is the schedule. Amort, the very word mort means death, right? Mortuary, mortician. So if there's a way that you could eliminate most of the interest in that mortgage and your other debts as well, and fast forward the timeline so that you can crush it, you shouldn't wait to get the perfect rate. because like you said, if you're waiting, the cost is just going up. So if we can make the rate almost irrelevant for you, where the effective rate, Melinda, you talk about this all the time with your clients, the effective rate with our system is typically somewhere between 1% and 2%.
Yes.
And you don't fully grasp what I'm saying by that. But if we can make your effective rate on all of your debts, like you had like a 1.5%, a 2.5% rate, no matter what your actual real rate was, wouldn't you want to see that?
Yeah.
Yeah.
And I'll just expound on that a little bit. So I tell my clients, it's as if you were able to refinance everything, the mortgage, the car loan, the everything, for a net effective interest rate. Like I said, the average I see around it, I've never seen it over 3%. It's typically under 3. I often see it under 2. I even see it under 1%. So conceptualize that for a second. Number one, those rates that we saw, several years ago that were in the 2s and 3s, we're never gonna see those again, right? That was an anomaly. So we need to kind of bite the bullet and realize, hey, we're not really as bad off as we think we are, because that was an anomaly. We're kind of back to normal where interest rates are concerned. But because we've been so conditioned, like Brian said, to focus on that interest rate, the average consumer is not aware that that interest rate, even if Brian talked about how they're only going to be in that loan maybe 6-7 years, but even if they paid that loan off in its entirety over a 30-year period, regardless of what your interest rate was, everyone pays somewhere between 30 to 40% interest volume. So that rate is your APR, your annual percentage rate. That's going to help determine the size of your payment. So obviously, if we've got a higher interest rate, our monthly payment's going to be higher. If we've got a lower interest rate, our monthly payment's going to be lower. But when it comes to that interest volume, and David, I'm sure you've seen this at the closing table, or what we call the total interest percentage. Once we get to the closer gets to those docs and they're like, you don't really want to look at this, because you really don't want to see what kind of interest you're really paying. Well, yeah, we do. And we need to start educating our clients about what is really going on inside. So that's what our company does. We peel back the curtain and we kind of expose what's happening internally that they don't want us to know about, frankly. They want us to just keep living in oblivion that it's all about rate and payment. And God bless our mortgage lender friends, because the refinance is like their holy grail, right? That's their cash cow. That is their end all be all. And that's what they've conditioned the public to think, is that, oh, well, go ahead and buy the house, marry the house, but date the rate. Have you heard that, David? I just want to go.
Yeah.
Every time I hear that, I'm just like, it just like sets me on edge, because that's the mentality that unfortunately, we've got a lot of mortgage lenders that work in our company, and they will be the first to admit, we didn't even really know this was how things work. I mean, they've been in the business 20, 30 years, and it's like, we didn't understand that's really how, that amortization schedule worked or whatever. So, I don't mean to pick on our mortgage lenders friends, because God, we need them for sure. But that is just what we've all been conditioned to think, that we're going to just hang in there until we can refinance. But guys, that refinance, you reset that 30-year clock. All these amortized loans are front end loaded, means the first 1 to 10 years of that loan, you're paying all of that interest up front. The bank wants their profit because, hey, they've done their homework and they know, just like Brian said, the average person's either going to sell or refi, in somewhere between 1 to 10 years. So the banks are always in profit mode. So our system is just kind of eliminating that and saying, hey, let's get the banks out of your life altogether. Let's get them out of your pocket and let you get out of debt quickly and begin to create wealth, because, hey, when our money's going out to someone else every month, it's not working for us. It's working for the banks.
Hey,
Well,
Melinda and Brian, if I could first ask, and first of all, let me just say, if anybody questions what Melinda and Brian are saying, go look at your purchase package or your refinance package. Look at the truth in lending. Right across the top, it tells you what your loan amount is, and then it's going to tell you how much your interest is. And 100% of the time, that interest is way more than your loan ever was.
Exactly.
So can you talk about the practical application of this? how do you actually help people pay off a mortgage in 5 to 7 years when it's a 30-year mortgage without saying, okay, all you need to do is double your income and we'll pay all your bills off, which is what most people probably are thinking, because it just doesn't make sense to that. Can you just talk about how this specifically works and why you're able to do what you're able to do?
Yeah. So here's the best way I can visualize it and talk through this with you guys. The way interest is calculated actually does matter. And we hit on that when we were talking about the amortization. But the way interest works really does matter. And what our system does is looks at every single debt you have, but then looks at your income, your expenses, and in a very mathematical way, looks at your very strategic moves, like almost like you're playing chess. Okay. And so it's understanding that the way your cash flow can work will literally eliminate a ton of interest for you without affecting your cash flow and lifestyle. Okay. There's going to be very strategic timing and moves that may make you move some money from one account to the other. Well, why would I move, $525.85 from my checking account into my savings account? Well, because while it's sitting there, you just earned $10. Now, to you and I, $10 means nothing, right? But to a mathematical algorithm, you just made those dollars for those 10 days or whatever it was more efficient. And therefore, it's a compounding effect. Compounding interest is real, right? And I'm just using that one little example. Well, how about have you ever, this may help, Terry, have you ever used a credit card, bought some groceries, bought some things for the month, but then before that billing cycle hit, you paid it off? Yeah.
Sure. Yeah,
Okay.
absolutely.
So the interest rate on that credit card was 29%, but you just borrowed $3,000 from that credit card interest free because you paid it off before the cycle hit, right?
Yes.
But I thought the interest rate is all that matters because the rate was 30%. So how come you weren't charged 30%? Well, because you took the rules and a very strategic move by using the credit card and then paid it off. Okay. So just to kind of get everyone thinking a little bit, if that's the timing you can do on your own, what if you were Neo in the Matrix and understood every single algorithm that was out there to mathematically completely hit everything perfectly? And what if the system said, well, take $10,000 from this. Let's use a HELOC, since there's a lot of realtors and a lot of people moving and everyone knows what HELOCs are for the most part. What if you took $10,000 from your HELOC on February the 5th and sent it as a principal payment to your mortgage? Now, someone on the line hearing this is, well, why in the world would I do that? My interest rate on my HELOC is so much more than my interest rate on my mortgage. Well, if you understood the way the interest is calculated, you would pay, I don't know, $30 in interest. I'm not going to do that math for you guys right now. But if you sent $10,000 to the principal of your mortgage right now from the HELOC, your lifestyle didn't change at all. You didn't even go into more debt, did you? But that very strategic move would cancel, oh my goodness, months and months and months of interest and actually jump you ahead in the loan schedule, which now your principal and interest payments in the future, a lot more is going to principal as well. So would you trade $30 to take off, let's just say, a year of debt? I would.
Yeah.
Now, the problem is you don't want to do that in a bad way and get yourself in trouble. But if you had a mathematical perfect algorithm that knew exactly when to move money, how to move money, and when your real life is happening with Waze, when that accident is 3 miles up, and it reroutes you the most efficient way, right? We have something planned for that. We even have a forecasting and planning tool that a lot of our investors love. If you knew that, hey, I want to buy that next rental property next year, and this is roughly what I'm going to pay, this is going to be my payment, this is going to be my rent, and you knew exactly how it was going to affect your whole dynamic, outcome before you had to make the decision to do it, how valuable would a tool be like that for you? How valuable would it be too for all you realtors and mortgage people on watching this, for your clients? If you could strategically see how something was going to affect you before you even had to do it. And here's what I'll say. I'll encourage everybody, if you guys are okay with it, I'd like to put like a little link to like a request more button, or right. And like,
Absolutely. Yes.
right,
You'll
I
be
would,
able to, yeah, we'll be able to share, you'll be able to share your screen. We will, when we get towards the end, we typically will have that in there.
yeah,
And Terry, another blockbuster show. You know, when Terry and I got together and we decided that we were going to start offering more to our members of Leaving California, this is exactly what Terry was talking about. This is, we just want to continue to add value to our 300,000 members. And hats off to Terry for bringing these guests on. I really appreciate you. Terry's my idol. I mean, what else can I say? He
Terry
created this,
rocks. Terry,
and every week we talk about this. And Terry, it's so funny because he usually says, "Well, I really thought I'd get to 500 people in my Facebook group, and here we are at 300,000, and we're helping people." We're not here to tell people to leave California. We're not here to tell them to be a Democrat or Republican. We're just here to give out information and give value. So Terry, hats off to you. And the thing I was going to say before Terry comes on is I want you guys to talk about what does it cost and what does it look like if somebody wants to hire you guys to help them pay off their mortgage in half the time or even faster. Go ahead, Terry. You go first.
I was just going to say, imagine if you are in California and you're retiring in 5 years, which a lot of people are. They've got a window. They know they're going to leave California eventually. What better program to put into place so that when you retire, when you have a life change, you're in a much, much better financial situation. And with Brian and Melinda's program, you can be in that position. Imagine instead of thinking you've got, 200,000 in debt on your house, it's paid off instead. And how that helps you to leave California, move to a better place, and buy a bigger house or buy a bigger piece of land or whatever you want. I think this program, the United Financial Freedom, is a great program to allow people to be able to do that. So it helps anybody, even if you're not getting ready to retire. It helps you be in a better financial situation. So when you do leave California, you've got more options available to you because you've gone through this program.
absolutely.
well, and we tell clients all the time, they'll say, Melinda, I don't plan on being in this house 30 years. Why would I want to? Yeah, but if you plan on selling in 5 or 7 years, don't you want to have the most equity that you could possibly have in that home? So when you do sell it, you're going to be so much farther ahead than if you just continue to follow the bank's plan. Guys, people don't know there's a better way. And that's what I love about who we are and what we do. We're so big on education. We want people to understand that not only is there, different ways of going about things, but there truly is a better way instead of just following the bank's plan. I mean, you could write a check, to on that. I read a statistic once, I think it was bankrate.com, that if you have a $350,000 mortgage at 5.5%, you are going to pay 104% interest volume over the life of that loan, meaning you're giving the bank $365,000 of interest on top of your $350,000 principal balance. So think about that for a second. 360, that's more than you paid for the house. And that is, interest is just the bank's profit, guys. And when I started to look at it that way, it kind of put a fire in my belly. I'm going to be honest. It was just kind of like, ooh, why would I really want to give the banks 1 penny more than I absolutely have to? If there was a way I didn't have to, wouldn't you want to know? If there was a way, a different way, a better way, wouldn't you want to know? And that's exactly what we are. And I tell people all the time, for the cost of 1 to 3 mortgage payments. Now, and I have no idea what y'all's mortgage payments are. I mean, mortgage payments vary, right? But I just kind of throw that out there because everybody's like, well, what does this cost? It's a one-time cost, and it could cost you somewhere between 1 to 3 mortgage payments, depending on what your mortgage payment is. But guys, if it's saving you 200 mortgage payments, and everything's going to be paid off in 8 years, let's say, and you're keeping 100 grand in your pocket that you were scheduled to give the bank, but now you get to keep that. it's a fraction of what the system can save you in time and money. We offer a complimentary analysis for everyone where we do an overview of your debt, your income, your monthly expenses. We plug it all into the system, and it literally computes your specific debt-free date. And I want you to think about that for a second. If anyone else has ever done any kind of debt elimination strategies out there, have you ever been given your specific debt-free date? I mean, that's huge. You're going to know the exact day, month, and year that you will be debt-free. And it's also going to tell you how much money it's going to save you. That interest savings that you get to now keep instead of give to the bank. And then it also computes your specific one-time cost. But like I said, it's typically anywhere between 1 to 3 mortgage payments. So
Yeah.
hope that answered your question about cost.
Yeah, the next question obviously would be Brian. It looks like Brian's in deep thought over there. He's trying to figure out how. So what I'd like for you to do, if you want to share your screen, you can, Brian. And if you want to let people know how they would get this free consultation, that would be awesome. And what the process would look like if somebody was interested in using your services.
Hey, let me ask you a question real quick, Brian. A lot of people know how much they're going to make every month, but a lot of people are self-employed. I assume the program is very adjustable for people who have no idea necessarily month to month what their income's going to be, and it adjusts to that.
Yeah, it actually works extremely well for that. Think of it again like the GPS in your car, how it gives you a pathway, but as your real-time driving, right, your real-time expenses and income, if you're self-employed, it's constantly recalculating in real data. It's not a step. It's not like MapQuest, right? Where MapQuest used to be, hey, here's the report, and we're going to spit out one way of doing it. And if there's an accident or if the bridge is out, like, sorry, right? This is real-time data. So it's constantly recalculating your steps based on your real income, real expenses. It will never use money or tell you to use money for getting out of debt or putting you in a place where you actually need that money for an expense in the future, because it's real time. So it's really calculating the most efficient thing to do with the dollars you actually have, not the dollars that you maybe have. Is that fair?
Great. Yes, that's great.
Yeah.
Thank you.
Right. Yeah, absolutely. And so I don't know if I need to share my screen. I can if you want me to.
It's up to you, Brian. Whatever you're more comfortable with, you can say it, or you can just tell somebody what the process would look like.
Yeah, so if you want to at least learn more information, I guess I could certainly show. Let me share my screen really quick. Just by the way, I'm going to go through this really fast. Not all of this, but I'll just go right here because this is a real client data, and I'm gonna make it bigger. So this is real client data here, and this is a sample family, and this could be you, and that's why I bring this up, right? This is their income, this was the debt that they had, and standard, decent, right? They had debt payments, they had other expenses, and they were going to be debt free in 30 years. This real client with us is now only spending $68,000 in interest and will be debt free in 9 years instead of paying $234,000. That's huge, right? And every single client we have gets a success coach. They'll actually do sessions with us. Melinda mentioned that fee, right? And here's what I think is hilarious. We'll spend 2% to finance something, right? Closing costs, right? Or refinance something to get into debt yet again. Our average cost is somewhere between 1% to 4% of the interest saved. And it's a lifetime program, right? So it's a one-time thing. And even though it's a one-time thing, if you wanted to do a payment plan to just help you a little bit, they allow our clients to do that, right? And when they do that, it's like 80 to $100 a month. So would you spend $100 a month for just a little while, maybe 2 years or so, to save $100,000 and 20 years of debt payments? Like, think about that and learn more and understand more, right? This is the system. We're actually going to give you a demo if you just simply fill out a little form, which is right here. I don't know if you want to, I can post that in the chat or something, or we could use that. But this is right here is what we would do with you. We would literally show you one thing we didn't mention, the results we give to clients is fully guaranteed because we know it's just a mathematical equation, right? Neo knows the truth. He knows exactly what's happening in the matrix, right? And
Brian, can I interrupt you there? I
Yeah.
just want to get a little bit more understanding. When you say it's guaranteed, does that mean that the client has to act on all of your recommendations and that they get that guarantee, or do these things happen automatically?
Yes, so good question. So the client does have to follow the steps of the system, of course,
Okay.
right?
Yeah.
However, the guarantee is forever because it's an always interactive thing that's constantly changing. So as long as they're following the steps, the results that they're showing that the client's going to have are fully guaranteed, as long as they're following what we tell them to do, of course.
Understood.
Yes. Yeah, right. This form right here literally is the form that when you click on it, it will allow you to request information, put your name, phone number, email. You can even schedule a time to meet with Melinda or myself personally, and we'll walk through anything, any questions. But I'll encourage you, today is not a decision point at all. Today is like, do I want to learn more? Do I want to understand more? And that's what I would encourage people to do. Just come learn more with us, right? But I'll put this link right here in the chat as well.
And so you're not just talking about home loans, you're talking about, because a lot of times, and we go back to what I said originally, was 50% of everyone in Las Vegas is renters. So these people, a lot of times, the one thing holding them back is they owe too much, you know. So you're not just talking about loans, you're talking about any kind of debt. Is that correct?
That is correct. All types of debt.
Okay. And then I think, Terry, we're going to switch gears. And, you know, every week when we go to a different city in America, I always ask Terry this question. I don't think I've been to Central Indiana, Terry. How about you?
I drove through Indiana about 5 years ago from Chicago. I was on my way to Grand Rapids, Michigan. And
Yep.
that's and I did, my parents, when I was in the early 70s, we drove by Notre Dame. So that's my experience in Indiana. I tell you, we have a lot of people in our group moving to Indiana, and I think it's for those who want it, it's a red state, and it's a state that believes in freedom. And I know Melinda feels the same way, and so yeah, I think Indiana's a great state.
It is, and we are the crossroads of America. I mean, we are right in the heart of the country. So if you want to get anywhere, north, south, east, or west, chances are you're going to go through our great state. So, yeah, definitely.
So let's talk a little bit about your area and the area that you cater to. And let's talk about job opportunities. We'll start there, and then let's talk a little bit about real estate for anybody that's thinking about relocating to Indiana.
Sure. So absolute great job opportunities, career opportunities, and we even have special programs for like minorities who want to start up their own business. I mean, we really are very favorable towards that. It's a state that absolutely, I think we're known best for our Hoosier hospitality. We're known for our giving spirit. I've had people say, you know, I can't believe how friendly people are. You know, they actually want to talk to you and have a conversation with you. And they're coming from California, you know, people are passing each other on the street, and it's just, I'm sure there's no, you know, you're just passing one. If you're walking down the street or whatever, I mean, chances are somebody's going to say hello to you. Now you don't have to say hello back, but you know, that's the Hoosier way. That's the Hoosier way. It's a large, we're a moderately large city, but you've got that small town feel for sure.
You know, it's funny, every week we talk about this, and it really, last week, I think it was last week, Terry, we had a guest on our show that actually started crying. She got emotional. And we've had realtors, we've had people that have relocated out of California, and they say the theme is, I don't want to do this to my kids. I don't want to do this to my kids. I can't see myself raising my kids in California. It's gotten so bad. And then the other thing is that, you know, Terry and I always joke about this, but Terry said that when he lived in, nobody would ever wave to him. They wouldn't say hello. And now when he lives in Florida, everybody's nice. We want to live in communities where people are nice and they wave at you and they say hello. So have you had any personal experience with relocations where that's been the case?
Yes, I have done a few relocations, and just other people that I know through my church, or have met in various ways that have relocated from somewhere else, and they fall in love with it. I mean, Brian could even talk about that. I mean, he's not a Hoosier native like I am. He's only been here a few years, but he and his wife Brooke and their kids, they love it here. And so there's a lot to say about people moving. I know the biggest objection I hear from people is like they're worried about our weather. They're worried about, oh my goodness, can we handle the cold and the snow? And we've had literally a dusting of snow this year so far. I mean, it's like virtually nothing. Now, we did get some pretty cold temperatures a few weeks back. I will say that we were pretty frigid, but I love that aspect of Indiana. I love the change of the seasons. If you really want to experience, the springs and the summers and the falls and the winters and the change in the seasons, it's a great place to be. The foliage in the fall is absolutely gorgeous, and we have some amazing state parks that are literally within an hour from central Indiana. I mean, you can drive anywhere, and that's another thing I love about it, is that you can be in the city, but where everyone lives outside of the city, you're not dealing with the traffic like you are in California. I mean, it's funny because I know some people from California or from Atlanta. My sister lives in Atlanta, and she's like, "You call this a traffic jam? This is nothing compared to
Right.
what we deal with on a daily basis." So the traffic is so much better traffic flow, and literally your commutes. I mean, you can live 15, 20 miles outside of the city, and people are commuting into downtown Indianapolis for work. It's easy peasy. So I love that. I love that we have a 465 is our oval that goes around our city. Okay, and then we've got 70 that goes east and west, and 65 that goes north and south. But I love the oval because I mean it'll get you anywhere at any time, and it gets a little congested, but hey, it's nothing compared to what you all dealt with in California, I know for sure.
It looks like Brian wants to say some stuff. And Brian, make sure you let everybody know where you moved from, and go ahead and tell us your top stories about that area.
Yeah, I wanted to say thanks for noticing. I wanted to say stuff. But so I've been here 5 years now, which I heard once you're here 5 years, you can call yourself a Hoosier. So, all right, so I am a Hoosier by default now. But I was born in New York and right outside the city. But then I moved. I was actually lived in Florida I went to Florida for college. I lived there for 20 years. And then about 5 years ago, actually, it will be 5 years in March, that we moved to Indiana. And the reason why I wanted to bring it up is one of the main reasons we moved here. There was about three main reasons. One of them was we wanted the change of the weather. Like we truly did, for our children to experience it. Like we wanted them to go through spring, summer, then fall, then winter. Like been such an amazing thing for our children to experience that they weren't getting in Florida, right? Now, yeah, in the frigid days, do we miss Florida? Of course we do, right? But
Yeah.
we love the change of seasons. And I'm gonna say what I felt the first day we moved here. I thought people in the neighborhood, and I'm gonna be transparent, I thought they were being so fake. I thought they were being so fake. They had like what you would see in the movie. Someone brought us a pie to welcome us to the neighborhood, and then someone like wanted to get to know our family right away. And I was like, this is weird, right? But here's the truth. They weren't being fake. The family values here in the Midwest and in Indiana, like it's real. And I know they say Southern hospitality is great, which I experienced. It was. Guys, I'm here to say Midwest hospitality tops it. I love the way people are here. They're genuine and they really do care about like helping each other and making a difference for one another. I think it's a lot of the old, I'll say farmers that have been around for years, and they instilled amazing values in their families that just went down through generations to help your neighbor and to be a good person. I see that everywhere around here, hands down.
That doesn't happen in New York, Brian.
New York people are extremely kind and very helping, but they're just brutally honest as well. That's
Well,
all.
and they wave in New York. It's just a different kind of wave.
Yeah.
Oh, all right. Well, we're this time is flying by. This has been so much great information. One more thing about real estate, and then we can start wrapping up. But Melinda, if you want to share anything about your market, the median price, days on market, inventory, things, if people are looking to this area. And by the way, I highly recommend Melinda. I haven't got to know her, but I can just feel her passion. She's not salesy. She's not going to just say, where do you want to buy a house? She's going to say, let's go look around. Let me show you. Let me see if this community is right for you. So I can just see her passion. I know she would be amazing. She'd be a great resource for you. And she said earlier, she is a native of this area. So talk a
Can I
little
say
bit
one
about
more
real
thing
estate.
really quick? Can
Go
I just say
ahead.
one more thing? If really fast, I don't mean to cut you off. I apologize. But one of the things that has helped our children when we moved here, and I think others would want to know this, our kids are thriving. They are thriving. And one of the reasons is I've noticed the teachers in the school system, they really care. They genuinely care. They're not just getting through the day. They're actually pouring into our children, and it's helping them immensely. So I just want to say that. Yeah.
Go ahead.
Yeah, I was going to talk about our stellar school systems that we have for sure. So I appreciate you bringing that up, Brian. But yeah, so buckle your seatbelt. But our average median price for our homes is $240,000. Look at David shaking his head. And like my husband and I, for example, we are currently in our home that's 1,500 square foot. Okay. Now we've completely renovated it. It was built in 1996, and we've completely renovated it. But I know homes in California for 1,500 square feet that are going for $500,000 or more, right? I mean, you just can't get that kind of, so the bang for your buck that you can get if you decide to move to Indiana, you guys can upgrade. If you're in a 1,500 square foot house in California, my goodness, you could buy two 1,500 square foot homes in Indiana, or get in a 3,000 square foot home for the same price. The cost of living is just it's incomparable. It really is. It's hard to fathom that we live in the same country and we've got prices that are so vastly different, and markets that are so different. So our average days on market has increased a little bit because inventory's been low all over the country. It's not just an Indiana thing, but it's been low all over the country. But a big part of that driving force, guys, is what we just talked about with the interest rates. They literally have frozen people. Buyers don't want to buy, sellers don't want to move because they're in their 2 or 3% interest rate, and they're like, why would I sell and when I have to get into an 8% interest rate, right? But if you think about what we've talked about, how that interest rate doesn't really matter. Yeah, you still have to qualify for whatever that rate is at, and you're still going to have to make that monthly payment. But if you can be out from underneath that payment and all your other debts in in a fraction of the time, it makes perfect sense. So I believe we have the answer to the stagnation that we're seeing in our market today, because people are they're downright afraid of the interest rate. So if we can show them it's not about that, if we can show them the better way, the better path, that they don't have to focus on those interest rates. So as a realtor in Central Indiana, I absolutely love what I do. I love showing people homes. I love getting them into their homes, helping them sell their homes. But I also want to give them something that is such a value add to what I can offer them as a realtor. This is life changing. What I can do is life changing. I can help you find your dream home, but I can also change your life in a way that is going to be so impactful. I mean, to think that you can begin to create wealth for your kids and your kids' kids, kind of thing. But getting back to the housing market, so we've got tons of new construction, and think about this too, guys. I'm talking move-in ready homes that are ready to go right now. We've got a lot of new construction sites people backed out, when they put their money on the line. Yeah, we're gonna build this house, and then when rates went up, they just boomed. So builders are finding themselves with a lot of spec homes, if you will. So we've got a lot of move-in ready homes, brand new homes, and these builders are literally giving away the farm. I mean, they really are giving away the farm. And so I always encourage people, if you can't find something due to the low inventory, something that really meets your needs, let's take a look at new construction. You don't necessarily have to wait the 6 or 9 months. They may have something already ready to go for you to move into. Yep.
Thank you for sharing that advice. And as we're coming up to the top of the hour, Terry, what else do you have to add today to this show?
I don't recall. I think we mentioned that you're in Indiana, but Melinda, can you give some of the towns in your area so that people know what area you work?
Yeah, so I service all of central Indiana, which includes Indianapolis and literally all of the suburbs. But I will tell you this. So, our top 10 fastest growing market areas within the central Indiana area, Carmel is right at the top. Carmel is on like the northeast side of Indianapolis. That's a highly coveted area. Kokomo, which is a little farther northeast, is another one. That's maybe about an hour's drive from Indianapolis. But then we have Columbus, Indiana, which is down south. It's maybe 45 minutes to an hour south of Indianapolis. We've got Greenwood, which is on the direct side of Indianapolis. That's a really up and booming area. Where I live, Brownsburg, I'm on the direct west side of Indianapolis. And then you start going north. You've got Whitestown, Zionsville, where Brian lives. You've got Fishers, Noblesville, Carmel up there. And then you start going south of Brownsburg. You've got Avon, you've got Plainfield, Mooresville, and then you get down into the Greenwood, Center Grove area. Just those communities are thriving, and those are probably the highest coveted communities around Indianapolis.
Great, thank you.
That's wonderful. So as we close, as I told you guys earlier, I know that there's going to be a lot of people that watch this show. And the interesting part, and I try to share this as much as I can, is that we want our members to watch our show every week. Even if you're not thinking about moving to Indiana, you can watch our show and you can gain a lot of valuable information. So Brian, why don't you go first? And I'd like for you to share your contact information, and if somebody wants to get a hold of you, please.
Sure. It's Brian at Nates, Nates, financial.com. So Brian Nates is my last name. So Brian at Nates, again, that's Nates, financial.com. Phone number is 321-288-7745. And yes, that's my Florida number that I
was
never
going to say that's a Florida area code.
And Brian, if you wanted to add anything in closing, you shared so much great information, and we do appreciate that. But in closing, do you have anything else that you wanted to share?
Thank you for the time. Thanks, Melinda, for inviting me to be a part of it as well. It's a beautiful thing to help people change their life. Like Melinda said, it's really a blessing to be an impact and make a difference in people's lives with this program. I encourage you to learn more. That's how I'll leave it.
And Melinda, go ahead.
Yeah. Well, so I'm Melinda Chapman. My email is mkchapman, like my last name, CHAPMAN, VDR for Values Driven Realty. That's the name of the brokerage, and it's at gmail.com. So mkchapmanvdr@gmail.com. My cell number 317-797-3136. And shoot me a text, or let's just have a chat. I mean, I'll be happy to share more info with you, but truly the best way to learn, I want to emphasize this, the best way to learn about who we are and what we do is to have your own analysis done. It's absolutely cost you nothing to meet with me. It's usually a 3 appointment process, because we're literally doing an overview of your debt, your income, your monthly expenses. So if you think about that GPS in your car, that GPS has to know your location in order to direct you where you need to go, right? Well, our system needs to know your financial location. So we just do an overview of that for the purpose of the analysis. But then once you own the system and you meet with your coach, and they're going to plug in all the, the variables that we didn't need for the purposes of the analysis. So I just encourage everyone, learn more. Guys, there really is a better way. And I didn't share our personal testimony, but the only reason I'm here and talking about this is because of what it did for me and my husband. A little over 2 years ago, we were introduced by a realtor friend out in California, and I almost poo-pooed it because we didn't have any other debt other than our mortgage. And in my conditioned way of thinking, I know everything there is to know, right? Well, I didn't, but I thought I did. I'm thinking there's nothing that's going to improve our situation. But we went through, we had our analysis. Guys, it took our 11-year mortgage. That's all we had left. We had 11 years left to a 2.6-year payoff.
Wow.
Let that soak in. Saved us $18,000. And guys, when I picked my mouth up off the floor, I just remember looking over at my husband and saying, "Oh my goodness, honey, I'm not going to be able to keep my mouth shut about this. Anyone and everyone with debt needs to know." So that's kind of where, so I will talk to you about it. I will shout it from the rooftops. I believe in it 100%, and I'm an avid user of it. So
And actually, we're going to be having a mortgage burning party for you. What, next month after? Soon.
Yeah, absolutely. We see the finish line is there. We can see that finish line. We're really excited. So
That's great.
yeah.
And Terry,
All right, thanks, you
anything
guys.
close? What do you have, Terry? Anything else?
Nope, we're done. I appreciate
All
it.
right. Well, thank you so
Thank you,
much,
guys.
everybody,
Thank
for
All right,
Terry.
thank y'all.
Thank you.
for tuning in.
Bye-bye.
All right.
Bye-bye.
Bye-bye.
See ya. Bye-bye.